Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address rshaw@fxcm.com, and today is Tuesday, and it's the 14th of December 2021. Just going to bring up a high-risk investment warning, and I'll follow that with our commentaries disclaimer, and then we'll get into the CNBC morning note and do the analysis. All right, here's our commentaries disclaimer. And just our references, which would be MarketScope 2.0 and CNBC.com. Specifically, just want to go through the European markets morning note. And you can see the headline here, saying European markets head for lackluster open as Omicron concerns weigh on sentiment. Okay, so European stocks expect to open in positive territory, but sentiment remains cautious amid the continuing spread of the Omicron COVID variant. European stocks slipped Monday as traders reacted to developments regarding the Omicron COVID variant. UK Prime Minister Boris Johnson confirmed yesterday that at least one patient infected with a new Omicron variant of COVID-19 has died in the country. Mainland China reported its first case of the Omicron COVID variant Monday in the city of Tianjin, about 2 hours drive from the capital, Beijing. Okay, so this is now where the economic news comes in. So it's a very busy week in terms of central banks. So you'll see here we've got the Fed tomorrow. Bank of Japan's probably the one that's got the least amount of volatility. Bank of England and ECB are going to be on Thursday. So we start off Wednesday. I think it's about 8 p.m., but I'll confirm tomorrow. And then the press conference at 8:30. And then we'll have the BOE, European Central Bank. Federal Reserve two-day policy meeting begins today. They expected to discuss speeding up of the bond buying program. This comes as we saw that inflation data on Friday came in at 6.8%, which is the biggest since 1982. And the core reading, by the way, the core reading is the biggest since 1991. When the biggest reading, it's the biggest surge. So I think it's referring to the pace, not the print. We're slightly higher than estimates there. US stock futures were a little changed during overnight trading, and that's after the major averages started in the week in the red as COVID Omicron fears hit sentiment. Let's just go here. Asia Pacific overnight Chinese stocks declined, tracking losses in other parts of that region. Again, Omicron here is the reason. And Bitcoin prices continue to tumble. All right, I think we'll take a look at Bitcoin tomorrow. Okay, and UK employment data, I think, and Euro industrial production. Okay, hey Katie, good morning to you, and thank you very much for joining. And I'll just extend a warm welcome to everyone. Thank you very much for joining. Let's go through to the weekly chart here. All right, so a top-down analysis, and let's see here. All right, so just taking a look at it in terms of the potential swing low. Let's just examine that. And that swing low seems to have found support at an area that the market certainly seems to be protecting or paying attention to in terms of attracting bulls. Last week, we confirmed the swing low. So let's just go through the three conditions. Condition one was this week's, so we're talking the candle from 2 weeks back, That's the lowest low in at least 3 candles. So the candle to the left has a higher low, candle to the right has a higher low. Last week we've got condition 2. What's condition 2? Condition 2 is taking out the reference candle's high, and then condition 3, closing above the reference candle high, and that's a swing low. What's the big deal about a swing low? Well, if there's going to be a swing, it comes off of a swing low. So you can see here's a swing, and we're looking at a weekly. So we had 1, 2, 3, 4, sort of 5 weeks of blue candles, and then this massive decline. But 5 weeks after, here was the swing low here. Well, there's no real swing there. I mean, we had 1. So the fact of the matter is, we need a swing low for the swing. It doesn't guarantee the swing, and that's the takeaway. But here's another one. Okay, so here's a swing low, and that's quite a substantial swing. See, so the fact that we've got one of these here, I think, is noteworthy. And the way that it would cancel is that it gets a contra. And what's a contra? Contra is a swing high. Okay, so we need to get some sort of swing high, because downswings come off of swing high. So we don't have the last active swing is actually a bullish swing on the weekly chart, and the moving average. So this is a 30-week. This is a 30-week exponential moving average. The reason I put it there is just something that Stan Weinstein spoke about in his book. I've seen a 34. I mean, I don't think there's any magical number here, but I just want to let you know that this is a 30, and it's turned up. So it's not so much price being above the moving average, it's rather the direction of the moving average. So the fact that it's turned up, I think, is a bullish development as well. Again, doesn't guarantee anything, but it just we've got a lot of check boxes there. So we've got support holding checkbox 1. We've got a swing low, checkbox 2. We've got a moving average turning up, checkbox 3. So there's a lot of positives. Does it guarantee higher prices? Of course not. There's no guarantees, but we work within the realm of probability here. All right. Just before we go down to the daily chart, let's just do a few more things on the weekly. Just examining the price action for yesterday. So this is you can see it's a very weak candle. It's a very weak candle on 2 levels. The first level is that it's a spinning top. Okay, it's a spinning top. We know spinning tops are candles of uncertainty. Just to explain it, why they are uncertain. So you can see that bulls try to take price up, but they were rejected. You see bears try to take price down. They were rejected, and we kind of ended flat. Yes. So although this is a weekly chart, and we've only really got one and a half days of trade and only one real European session. So at the moment, sort of with 1 day of trade behind us, it's an uncertain day. The second level that it's uncertain is the range. You can see it's a very small range candle inside of last week. So the bulls haven't had the fortitude to take out last week's high. Well, that's a requirement. We need price to take out last week's high. That's what a swing is. Higher highs, higher lows and higher highs, right? So we've got the higher low, but without the higher high, there's no swing. So it's an uncertain candle. If we go through to the weekly chart that's just got these indicators, and we just want to keep an eye on, well, it's nice to see that the RSI has popped positive. To me, that's not a big deal. The RSI for me is much more useful in the extremes, sort of above 80, below 20, but the fact that it's moved bullish, okay, that is a bullish development. We still want to see the stochastic swing up, and it's not going to do that without a swing, right? So it's just, the takeaway on the weekly chart is an uncertain start to this week off of a bullish setup. Let's go down to the daily here, and we're in zone 2. Okay, we're in zone 2. Zone 2 is our neutral area, and that's between these two blue bands. The bullish area is between the upper blue and the upper red. So if we move towards the upper blue, upper red, that's bullish. And of course, price can't go higher without being in the bullish area. So we're not there yet. But the positive again is we're out of the weak area. So the fact that we're out of the weak area and have gone neutral, well, that is again bullish development. And then you want to just keep an eye on what I was looking at yesterday. Is again, I wanted to see if we got a swing low. We didn't. We got 2 out of 3 conditions, and without the third condition, you've got nothing. So yesterday I took a look at Friday's candle. Friday's candle's got the lowest low in at least 3 candles. Yesterday's candle, when I looked at it, it was nicely above Friday's high. So that's condition 2. All we needed was for price to close above the reference candle's high, and then we've got that swing low in. Now, would that swing low guarantee higher prices? No, but without it, we're not going to get higher prices. So the fact that we didn't get it, well, that's an indictment. And the way I think we need to just keep an eye on that is well, if the bulls failed to show sort of their strength yesterday, well, we're going to be stricter with them. So we're going to move the line in the sand, the test, we'll push that up to yesterday's high. And now for condition 3, we want price to close above yesterday's high. So we're going to just keep an eye on that. And let me just see if Peter's written. The massive down candle on weekly is making things difficult. Yes. Let me give that some thought. So I think this is the candle that Peter's referring to, and the idea here is he's saying, well, this is such a long, ferocious sell down here that we're still actually reeling from it. We haven't quite recovered from that, and I think that is certainly a possibility. I think if that would be the case, we would be looking for something like this. So this would be quite vicious, wouldn't it, Peter? So we had this kind of 1-2. We've got this, and then if we had something like that, gee, that would be quite. I think that would be quite damaging to market sentiment. So that is certainly one of the scenarios that could play out. And the idea here is, well, what caused this? That was the emergence of Omicron. Well, what did we read in the CNBC? What did we see? What did we read in the CNBC morning note? Well, the market's still concerned with Omicron. Well, there's the link between the sell down and the current spinning top. See, so yes, I think that is something that we need to be. I think that is something that we need to be cognizant of. Let me just go back to number 3 here. Katie saying, where do the fundamentals direct us? That's a very good question. So I did a valuation on Apple maybe 2 weeks ago or last week. You can find it on Insights. It won't be hard. If you go into Insights and you click on stocks, you'll find. Now, the thing about valuations is that they are heavily dependent on assumptions. and assumptions, as we all know, are extremely fallible, right? So the way that I applied it, I tried to just apply a more statistical method than anything else. I did what's called a Monte Carlo test. In other words, I took some line items off of the income statement and projected them forward with the sort of the median growth rate, I think, over the last 10 years. Because why I used the median with Apple is because you've got these huge outliers between the good years and the bad years, which are, to me, kind of skewing the way forward. So I just used the median, which is slap bang in the middle, and then I just applied a standard deviation to the median. In other words, the risk, there would be a certain risk that we are missing the median downwards, and there'd be a certain chance that we are surpassing the median upwards. And then I ran it through a Monte Carlo system, which calculates it. I ran it through, I think, 10,000 iterations, and I did it in Excel. So it's once you've got the sort of Excel spreadsheets, it's not difficult. And then I just took the average of the 10,000, and I got Apple as roundabout fairly valued about 2 weeks ago, just based on that. And again, the caveat there is like, well, Russ, how accurate are your assumptions? And that's the you know, the big question. So on that basis, I think we're pretty close to fair value on the market using a company like Apple. Now, in terms of say the DAX and European markets in general, it's probably not the right company to value, because I'm not sure how cyclical Apple is, whereas the European markets tend to be cyclical. So that being the case, I would suggest there is probably a little bit more give in the cyclical markets in Europe, KD. And the reason I say that is for the same sort of theme that we've been running probably for a year now, which hasn't really panned out, but the idea that there might be a reallocation out of growth, a reallocation of growth into cyclicals. Why would that be? Because the interest rate increases tend to support a more cyclical part of the market and hurt the growth side of the market. I hope that kind of makes sense. Just want to perhaps just say one more thing about that, in that as interest rates go up, if you take a look at growth companies, they tend to retain the income and reinvest it back into the business until they reach sort of a mature stage. Apple probably is at a mature stage, one would think, but it's got certainly in terms of its R&D, it's got growth aspects there, right? But the idea is that because they reinvest the money until they become mature, it means they don't pay out dividends. They don't pay out dividends until they become mature, because they need to reinvest that back to grow to that mature stage, and that's fine. That's what growth investors want. Okay, they want their companies to grow. But in terms of interest rates moving up, it makes our dividends worth less as growth investors. It makes our dividends worth less because of the time value of money. So that's kind of a brief explanation why there would be, one would think, a reallocation of movement away from growth to sort of a more mature cyclical type of So I think, I'm not sure if I've answered your question there, Katie, but I would imagine that the fundamentals, my opinion is that the fundamentals are still fairly good in terms of an index like the DAX. That may change, by the way, as interest rates move up, because at some stage interest rates are going to hurt cyclicals, and of course it's just going to start attracting money. Well, as interest rates go up, you'll go, well, I can earn a yield now. Let me just put some money into an account where I can earn some interest. At low interest, well, there's nowhere really else to go but the stock market, because you're not earning any interest. But as it starts to come up, that's going to change. Okay, there's a link here Katie sent. Just let me know if that kind of helps, Katie. I'm going to just send this link from Katie. It's a story off of Sky News regarding Omicron. Thanks for that, Katie. Just get it. All right, I've sent it to all. Okay, so let's just take a look at this this daily chart again. So we've put this as the new measurement. So we really want the bulls to prove that they're going to go into the zone of strength. We've made it harder for them in terms of our measurements. So even if we close up, well, and we haven't breached this aqua horizontal, well, you know, we still would be in doubt. The week is uncertain, but the platform has huge potential. Okay, that's where we are. I don't want that chart. Here we've moved out of the week, we're in the neutral area, so we're uncertain, we're neutral, but we have potential. We've moved out of weakness. All right, we go down to the hourly, and you can see that, well, the start is good. The start of the day is good, right? So we've got the exponential moving averages that are crossing positively, and we've got the stochastic that's crossed positively. And I think we just want to keep an eye on this over the next 55 minutes to make sure that this is maintained. What we want to see here is angle and separation in the exponential moving average, and we want to see the stochastic. And I say this all the time because I'm of the opinion this is really where the this is the key to the swing, is that we want the stochastic to make its way to the 80 and hold. That's the idea. So here it kind of hits the 80 level and holds. Now it's not the greatest swing in the world, but it's good enough to add some money to your trading account. See, there's a better swing. Okay, once it hits that 80 and holds, that's where the magic happens. The magnitude of the swing may be different clearly between the different times, and that just makes sense. But I would suggest that for us to really benefit from this really nice, strong start to the day, we want to see the momentum build, push to 80 and hold. And I think if the DAX can do that, well, then we'll go back to our daily and we'll see if we've got that condition 3. And if we've got that condition 3, well, then we've got a swing low on the weekly, then we've got a swing low on the daily, and we almost moving into the zone 1. Well, the zone 1 is where we need to go if there's going to be a swing. So let's just conclude by saying we've got the potential for a swing. Now, the only way that's going to work out is if we make it through to zone 1 and we sort of stay in zone 1. And you can see the DAX is certainly it's making the bulls are making an effort. Whether they have the momentum to do that, that's the challenge for us. So always use a stop loss, always use money management. All right, if there's any questions, just go ahead and type those in. I probably need to do some sort of valuation of a European cyclical company. So perhaps I can find one today and do it. And then Katie, I think I can sort of answer your question with probably something that's more meaningful. But anyways, I hope there was some value in the answer there. I don't see any questions coming in, so let's conclude at this point, and then of course we'll speak again soon. Thank you very much, guys, and have a good day.